Will the stock market crash again? That's the million-dollar question right now. That's something that's being asked all over the internet here, especially here on YouTube. So I want to give you guys my 2 cents on what I think is going to happen with the stock market here in the near future. Now I'm going to explain this in more detail, but in a nutshell, if you don't want to watch the whole video here for some reason, I believe that although a lot of stocks right now are extremely overvalued, or at least at a fair value in best case scenarios, I don't think that we're going to see another crash like we did in March. I think there's a high possibility that we could see another decline here in the near future, but a crash of that magnitude is very unlikely. As of today, there's just simply not enough fear, in my opinion, to send the market down like it did in March. However, even though we have seen a sharp recovery from the bottom, there are 3 things that I'm personally keeping a close eye on that could potentially move the market down lower. Now, as a quick housekeeping, guys, if you're brand new here, consider hitting the subscribe button down below to join the community. But as always, whether you're new or a returning subscriber, smash that like button down below to show your support for this channel. Now, many people believe that we're going to see a second wave of this global issue, and you know what? When I think about it logically, it's very likely that that's going to happen. However, what I do think will be different this time around is that we're not going to see as drastic of measures taken to pretty much shut down the economy. I think that the government has realized the amount of economic damage it has done essentially with almost 2 months of shutdown here. And I really don't see them doing this again, at least not at this scale. So in my opinion, if and when we do see a second wave here, I think that we are going to see a bit of panic and a bit of volatility start to come back into the markets. People are probably going to start panicking and selling off their stocks once again. We could potentially see some good discounts again in the market, but to think that we're going to see stocks get back to the levels that they were in March is highly unlikely. It's very likely that the Dow could easily lose a few thousand points in just a few trading days. That's something that we've seen a lot of in the last few months, and I think that's going to continue on for the rest of 2020 until we're really clearly past this global issue. What's different around a second wave is that this time around we have a lot more information. Back in March, we had no idea what a shutdown could do to the economy. We had no idea what the scale of this global issue would be in terms of health, and we just had way too many unknowns there, which just drove some crazy amount of irrational fear in investors. However, if a second wave hits, we have a much better understanding of how we're going to react, how the economy is going to react, how businesses could adjust and prepare better for this, and because of that and many other reasons really, I think it's highly unlikely, guys, that the Dow is going to hit 18,000 once again. What we've seen in recent weeks is that cities and states around the world have started to open back up. People have started to resume their normal life, and a lot of people are being smart about this by practicing social distancing and wearing a mask in public. And in my opinion, this could potentially prevent the second wave from getting out of control. It's not going to eliminate it completely, in my opinion, but now that there's much more known about how contagious this is and things that we can do to really reduce the risk of this, the fear aspect isn't as prevalent anymore. But who knows, I could be completely dead wrong here. But one thing that I like to follow here from an investment perspective is this fear and greed index. This tells me the general sentiment that the market is at currently. And back in March, we saw this hit a 1. A 1, guys, is pretty much the peak fear and panic you can see out in the market. And in contrast, in early 2020, we saw this hit nearly a 100, which is peak euphoria and greed. Neither level is sustainable. However, where we are currently around the middle of this index or so shows me that the market has taken a breather and investors are starting to think rationally once again with their stocks and their investments. Unfortunately though, for us value investors, this means that many stocks are extremely expensive right now, and many are up 50% or 100% from their levels back in March. But that's just how it goes, guys, when you hit extreme levels of volatility and peak panic. Now, I don't think we're going to hit another level of 1 here on the greed fear index, but I do think it's very likely we get back into the 20s or 30s if things start looking gloomy once again with the economy and with the health issue and with everything else really surrounding this whole 2020 crisis. But anyways, now I'm going to discuss 3 things that I think can drive a lot of volatility here in 2020, so let's get into that. The elections for 2020 is slated for around November 3rd, and typically during an election year, the market experiences volatility. This makes sense because depending on the candidates, certain companies and industries will benefit and others will suffer. For example, when Bernie Sanders was one of the top candidates here, healthcare companies like United Health took a beating, but once he dropped out, the fear was lifted and the stock had recovered back to its all-time highs. Now, I don't want to get into politics here on the channel, but as an investor, just keep in mind that this is an election year, and most likely towards mid to late summer, as the election gets closer and closer, there will be more focus on this and the stock market will most likely see some volatility from this as well. Now, this could potentially send us, depending on who looks like it's going to win, either higher or lower in the market by a few thousand points. And if we do move lower, that could actually end up being a very good buying opportunity, as it has been traditionally in the past. Now, on the same time that the whole election stuff will start to pick up, companies' earnings for Q2 will also start picking up. Q2 covers April, May, and June for most companies, so we should see reports come in at around July or August for most businesses. This once again could stir up volatility, but this has the potential to send us quite a few thousand points lower in my opinion. Investors will be looking at big tech like Microsoft, Apple, Amazon, and Facebook to see how their businesses are doing. And guys, if these companies say that they struggled in April, the market, in my opinion, will forgive that. However, if by some chance they say that they continued struggling in May and June, and they're not really sure what the outlook for the rest of the year or even in 2021 looks like, that's when I think we're going to see a world of pain here. If you didn't know, big tech makes up a huge chunk of the index, and if they show weakness, investors will sell out, panic will resume, and we can definitely see the Dow and the S&P lose a ton of value. I could definitely see the Dow moving down to close to 20,000 points if this does happen. Because let's be real, guys, if big, large tech companies start to struggle, we have a lot to worry about. Now, I personally believe that these big tech companies will report some segments that did see a year-over-year decline. However, some segments will actually report much stronger numbers than expected, like in cloud, for example. As the need for cloud services increases and remote work from home services increases, we're going to see companies like Microsoft and Zoom and other players that really benefit from people being home thrive in this sort of environment. It'll be really interesting to see what happens though here with big tech and earnings in general. But in my opinion, the real big catalyst that could send us back down to say the 20,000 mark on the Dow is if we see big tech fail on their earnings, and that could bring back a lot of fear and volatility in the markets. So jobs, of course, are a big one here to consider, and we have seen some records here with job losses in recent weeks. The unemployment rate currently sits at under 15%, which in itself is some historic levels here, but the general consensus for the market is that many of these jobs will eventually resume. I do tend to agree with this. However, there are many jobs, in my opinion, that are permanently lost. Many businesses have closed their doors for good, and many companies have downsized staff with no intentions to rehire anyone back. This is simply the reality of the situation and is where we currently sit today. In my opinion, it's naive to really think that all of the jobs lost will just come back with the flip of a switch, and I wouldn't be surprised to see 30 to 50% of these jobs not come back by the end of this year. Now, I've said this before, guys, and I truly do believe this, that many larger companies, and even some smaller ones, use this global issue as an excuse to cut staff that they wanted to do so for a while. This could be for many reasons, but in my opinion, it could be for efficiency and cost savings, but they use this global issue as a cover-up to do it now during these tough times, while many other companies around them were doing the same thing. So let's just say this, a lot of those companies that did those moves will not be hiring back their employees or even looking for new employees right now. But that doesn't mean that new types of jobs can't emerge out in the market. Maybe I'm being a bit hopeful here, but maybe from this whole lockdown period, a lot of new companies were started up by individuals, smaller businesses, which could actually end up thriving over the next few years. And maybe that starts another huge boom here in the economy. I know this being a bit optimistic here, but I like being optimistic in general. And that's something that I could see as a very small possibility of happening. But now, guys, I purposely listed this as the third point here because I think it's the least important catalyst to directly affect the market in terms of the stock market moving much higher or lower. I think it's pretty clear by now the stock market doesn't really care what the jobless claims are like. But I do believe that if, say, 6 months from now, we still see unemployment rising or staying stagnant and not declining. Then if you combine that with maybe company earnings starting to decline and election fear starting to pick back up, we could be in for a very rocky fall here in 2020. And if you have cash on the sidelines, you could benefit massively from that opportunity as well. So I mean, that's just really my thoughts here, guys. I'm not really looking to buy a lot of stocks in this current market right now. Most of the stocks I'm watching are extremely expensive, so I'm just building up my cash position, and I've made a few videos on stocks that I would like to buy if we see another stock market crash. So make sure to check that video out. But either way, I'd love to hear your thoughts in the comment section down below. Please just take a minute just to let me know what you believe will happen here for the rest of 2020. Do you think we're going to see another crash? Do you think we're just going to continue moving higher? I love to hear from you guys, so let me know in the comment section down below. But either way, guys, thank you so much for watching. Thank you so much for supporting the channel. Don't forget to invest positively, and I'll see you in the next one. Peace.